When you think about getting a mortgage, you're probably thinking about interest rates, down payments, paperwork, just a whole lot of numbers. But what if I told you there's a surprising and, frankly, crucial civil rights story hiding in plain sight in that very paperwork? Today, we're going to uncover that history, and you'll see why it's so essential for anyone involved in the housing market to understand. All right, let's get right into it. A modern mortgage application feels pretty standard, right? But pretty much every single question on there has a backstory. And one question in particular, well, it's like a key that unlocks a huge and really important chapter of American history. I'm sure you've seen it, that optional section asking for your demographic info. It can feel a little random, maybe even out of place, but it is absolutely not there by accident. To really get why it exists, we have to travel back in time to an era when where you could buy a home, and if you could even get a loan for it, was decided very openly by the color of your skin. The whole story behind that question starts with a massive fight against a discriminatory practice called redlining. And we're not just talking about a few bad apples here and there. This was a systemic barrier that was baked right into the housing market for decades. So what is redlining exactly? Well, imagine a map of a city. For years, government agencies and lenders would literally take out a red pen and draw lines around minority neighborhoods. They called these areas hazardous for investment. And if you happen to live inside one of those red lines, good luck getting a mortgage. It was nearly impossible, no matter how good your finances were. And here's the part that's really key to understand. This wasn't just something a few banks were doing on their own. This was often reinforced by official federal policies. The result? Deeply segregated communities and a system that effectively locked Black families out of the number one way Americans build wealth that can be passed down, owning a home. But of course, this injustice was met with fierce resistance. The civil rights movement was fighting on so many different fronts. And believe me, housing discrimination was a major battleground. Activists and their allies in Congress knew that for equality to mean anything, it had to include a fair shot at buying a home. And all that pressure, all that work, it was about to cause a massive shift in American law. All that fighting and advocating paid off. It led to this incredible wave of landmark legislation, mostly in the late 60s and 70s, that was specifically designed to take apart the legal framework of housing discrimination. There were 4 key laws that became the foundation for fair lending as we know it today. Just look at this timeline for a second. In less than 10 years, the entire legal landscape was turned upside down. It kicked off with the Fair Housing Act in 1968, and from there, Congress just kept going, passing this quick succession of laws all aimed at one thing: ensuring everyone had equal access to housing and credit. What's so smart about this is how these 4 laws all work together, like a team. You've got the Fair Housing Act, which flat out made discrimination illegal. Then ECOA came along and expanded that protection to all kinds of credit, not just mortgages. Then you get HMDA, which is like the watchdog, using data to sniff out discrimination. And finally, the CRA pushed banks to actually invest in the communities they had been ignoring for so long. Every single one is a critical piece of the puzzle. The Fair Housing Act really was the big one, the law that started it all. And think about the timing here. It was passed in the incredibly tense days right after the assassination of Dr. Martin Luther King Jr. It was a massive achievement for the civil rights movement. For the very first time, it was officially against the law for a bank to deny you a loan just because of your race. So building on that, you get the Equal Credit Opportunity Act, or ECOA, which basically said, hey, when you're deciding on a loan, you look at the finances, not the person's identity. Period. And right after that came HMDA, the Home Mortgage Disclosure Act. This was the show your work part of the equation. It made lenders report all their lending data so regulators could finally see if and where discrimination was still happening. And finally, there's the Community Reinvestment Act. This one went straight for the heart of the redlining problem. It wasn't just about stopping bad behavior. It created a duty for banks to actively serve their entire communities, including the low and moderate income neighborhoods that had been starved of investment for decades. It was all about putting money back in, not just avoiding discrimination. So, okay, these laws from half a century ago completely changed the game in the mortgage industry. But what about today? What's their legacy? How do they affect you when you go to apply for a loan? And what do they mean for the lenders who have to make sure they're following the rules? Okay, this is a really important point where people sometimes get confused. These fair lending laws are all about creating a level playing field. They guarantee your right to be judged on your financial situation, not who you are. What they don't do is create special programs or guarantee that anyone gets a loan. The whole point is equal opportunity, not a guaranteed outcome. Which brings us all the way back to where we started. Why does that form ask about your race? Well, now you know. It's because of HMDA. That data, which, by the way, you don't have to provide, is collected so that federal regulators can keep an eye out for patterns of discrimination. In a way, that little box on the form is a direct legacy of the civil rights movement, a tool designed to help keep the system fair. Now, it would be great if we could say these laws fixed everything, but the story isn't that simple. Making explicit discrimination illegal was a monumental step, but it couldn't magically erase generations of economic inequality. The hard truth is that major gaps in homeownership and mortgage approval rates between different racial groups still exist, which is exactly why enforcing these fair lending laws remains so incredibly vital today. So, when you put it all together, we have these powerful legal tools that were born out of a heroic fight for civil rights. But the work is clearly not finished. And that leaves us with a really tough but important question to think about. With all these protections in place for half a century, why do these deep inequalities in housing and wealth still persist? And what more needs to be done to finally close that gap?